Welcome back to the channel. This is Invest in Yourself. My name's Cameron. Thank you so much for coming back and watching my videos today. Today we are going to cover looking at PayPal's earnings and other fintechs that I may be looking to invest in the near future. But in today's two-part video, we're going to cover the first part, looking at PayPal's Q3 earnings and why Wall Street didn't take a liking to the numbers overall. And second, we're going to kind of cover other fintechs that I currently hold and other interesting companies coming to the market in this fintech field. So let me know down in the comments what you think of the video. If you were a PayPal investor, what you think of PayPal or other fintechs, let me know down in the comments. Pop a like, subscribe, and again, I love you all and thank you so much for the support. Looking at PayPal after market, after hours, the trade, it's trading downward after reporting third quarter earnings that beat expectations, and it's not immediately clear why PayPal is using ground, but all thought it could stem from retail investor having higher expectations than what analysts estimated for the high-flying company. PayPal overall, reported revenues of little under $5.5 billion and adjusted earnings per share of a little over $1 in the third quarter of 2020. Both were ahead of analyst expectations of $5.43 billion and a little under $1 respectively. So it seems like the rising consumer usage of fintech products during the pandemic is continuing. For example, the company reported what is described as the strongest growth in total payment volume in history. And going down here, you can see PayPal processed $247 billion, up 38% from year-to-year quarter, and $4 billion worth of payments, up 30% across the same time frame. For startups that want to facilitate consumer or business payment volume, that's good news, and the market is growing so quickly. PayPal also raised its full-year payment volume growth estimate for the year from the high 20s in the percentage terms from its Q2 earnings to approximately 30% as the end of Q3 2020, adding to the good fintech news overall. And looking at the right here on the bottom, looking at the Venmo payment processing volume rise 61% compared to the year ago period to $44 billion. That year-over-year gain was an acceleration of 52% growth in Q2. Again, compared to year ago periods, finally PayPal's payment transaction per active account on trailing 12-month basis grew a little over 40.1 from 39.2 in the second quarter. But overall, YouTube, I think it's too soon to learn, much about from PayPal's new Venmo credit card and its cryptocurrency efforts that bolstered the price of Bitcoin recently. But core consumer affinity for fintech viewed through the lens of PayPal earnings does look strong. So just in a little highlight, we went over kind of what overall their Q3 earnings, and we're going to get to the second part of the video, and we're going to talk about certain fintech companies that I hold related to fintech operations that I look at. And looking at the first company that I currently hold shares in is Square. Looking later this week, Square is coming out with their Q3 earnings, YouTube, and we'll kind of make another video on, I believe, on Thursday when they come out. I'll make another video giving an update on their financials, but we're going to get another great look at that FinTech's uptake as a company process both business payments and consumer transactions as well, and with cryptocurrency purchasing. So there's a massive shift happening in the way consumers pay for goods, services, and with digital payments, we're already growing before, the pandemic, but the stay-at-home orders and the push to social distancing have accelerated the trend in, Square overall. And the digital payments will be worth around an estimated $910 billion this year, and the market will jump to around 1.5 trillion by 2024, and Square is taking full advantage of this, YouTube. So Square is growing far beyond the point of sales of terminal, and for starters, looking at the company's popular peer-to-peer payment app, Cash App, it has 30 million monthly active users, and revenue from the app skyrocketed 140% in the second quarter to 325 million. Square users are spending more money through the company's online channels. Gross payments volumes from online channels jumped 50% year over year in the most recent quarter. This spike helped Square's total revenue increase 64% to almost $2 billion dollars. And we have to look at, Square's stock has gained almost 165% this year, YouTube. But investors shouldn't kind of think that Square's run is over. I understand with the elections and more of the, monetary and some of the financial, some policies were not getting pushed. There's a lot of uncertainty in the market, but the growth in digital payments and e-commerce in the coming years should help propel Square's business along. But e-commerce only accounts for 16% of all U.S. retail sales right now, and as the percentage climbs, so will the use of digital payments. So kind of covered a little bit about Square and overall what I think about Square. Again, I am an investor in this company and kind of building out a small, the last 4 months I built out a kind of a small overall share into the company with 12 shares, as you can see, almost $1,900. But when I see pain in the company going, I have a good price set point when I invest into Square. I do take advantage of that. Anytime we can get into under $130, I think it's a great buy, and I'll continue to add to this great fintech due to over PayPal because I like Square with their innovative and disruptive platform. So that's one of the biggest things I like about Square. I prefer over PayPal overall. Now looking over my next two FinTech's that are coming on the market or possibly coming on the market within the next year. This one's coming on the market here on Thursday as well, and it's ANT Group. Some of y'all are familiar with ANT Group. It is a subsidiary of Alibaba and was formed in 2014 to manage Alipay, a digital payment platform with over 711 million active users. And unlike Western mobile wallets, YouTube, ANT's platform touches on nearly all aspects of one financial life. And ANT goes, beyond what PayPal and Apple Pay does, offering service for everything from payments to credit to insurance to investments within Alipay, which the company calls a super app. But again, ANT counts more than 1 billion annual active users for Alipay app, and the app-based payments are commonplace in China compared to the U.S., even in for in-person transactions. And this is perhaps the most well-known aspect of their business. And there's other areas that I'm fully bullish on right now and more interesting for myself to be an investor in this company is the company's credit business, in which ANT originates loans that are almost entirely underwritten by financial partners, giving the company useful loan insights without requiring to take too much balance sheet risk. With ANT's IPO coming on Thursday, it's kind of one of those things, a lot of people want to get into. But there's some drawbacks. As you can see right now, and the upcoming IPO is expected to be one of the biggest IPOs ever. Around $34 billion has been already raised in this offering, but the downfall as investors wanting to invest in this company, ANT Group will only be available in the Chinese exchanges, and for us U.S. investors, we can still buy shares. In fact, there are kind of four ways, us investors in America can invest in the ANT Group, and one being like an international brokerage account with Charles Schwab, E-Trade, Vanguard. But be careful with those because when you do those transactions, you do get charged a international commission fee to buy these companies in different indices around the world. So be careful of the commission fees in that. Two is kind of the way I do it. I end up, luckily, over time, been buying shares of Alibaba for the last 8 or 9 months. And obviously with Jack Ma's company with Alibaba, they own a percentage of ANT Group because they're a subsidiary of that company overall. So that's another direct way you can kind of get invested into ANT Group is through Alibaba. So, and again, and we'll get into more of that later. Another kind of way to get invested into ANT Group is by an ETF. And some ETFs that offer it is like iShares MSCI China ETF and the Spider S&P China ETF, or ARK has a different ETF that offers with FinTech, and they're going to open a position in Ant Group. This is that already came from Kathy Wood a couple months ago, saying they're going to be investing into the Ant Group's overall IPO, and they're going to be holding it in their FinTech ETF. So that's three ways you can do it. And the fourth is wait for an American depository receipt, basically to reach the U.S. market. It's just basically a fancy way to say waiting for Ant Group to get published on one of the U.S. indices, especially, obviously it would go on the NASDAQ since they're raising this much money, and their market cap's probably going to be out of this world when they IPO on Thursday. So there's four ways that you can invest in the company, but I think the smartest way is to get into Alibaba, especially when you start talking about emerging markets. And I wouldn't be surprised in the next couple of years if we start seeing emerging market get better not capital gains, but overall gains than the S&P 500. I'm not supporting other emerging markets over the U.S. markets, but you're just starting to see a trend in the EM market. So just keep that in the back of your mind when thinking about maybe diversifying your portfolio into emerging markets. So the next company I want to cover is another company that is not a publicly traded company. It is the company called Stripe. And Stripe YouTube has been in the news recently with a possible IPO coming within the next year. But there's been a lot of articles saying that they've been denying it, but there's a lot of different pieces that are lining up. And since 2010, Stripe has been steadily growth with many successful funding rounds as well. In fact, it's valued exploding. Many investors are licking their chops for a potential IPO because these guys want to get in. They know the upside to Stripe and what they mean to different medium and big size businesses as a financial processing application platform. Stripe's value was up 20 billion in 2019, and just as of now in 2020, Stripe is now worth a little over 35 billion, and it's also raised 1.3 billion across 7 rounds of funding. And I think that's another sign, YouTube, of just them showing that they're getting ready to IPO, I would say, in the next year. And they probably wanted to hold off just because of the pandemic and the election year. It's probably, they feel, is not the time, and all these people coming out in IPOs and SPACs, they want to have their own limelight. And I firmly believe in the fiscal year 21, we're going to see Stripe come out. But again, Stripe works, with companies like Amazon, Uber, Salesforce, Shopify, Google, Facebook to handle financial transactions to its customers, and that's pretty good foundation, YouTube, of partnerships. And Stripe, as you can see, is now is over in 120 countries, and there isn't really much of a timetable in place for Stripe stock listing, but this growing business is in the right market at the right time, and many investors now consider Stripe IPO to be inevitable. And the question is, how soon will it be? And looking back in September with Stripe, they end up signing a new partnership deal with Salesforce that will process payments for Salesforce e-commerce service in its new enterprise customer suite Digital 360. And I believe, YouTube, this partnership is the latest step for Stripe in what appears to be a march towards the public markets overall. Stripe now has 40 companies processing $1 billion in payments over the platform annually. That just shows you how big of a monster of fintech and processing Stripe does for for so many different medium and big size businesses. And while Stripe has a number of other partnerships, including DocuSign, like we said, SurveyMonkey, now with Salesforce, I think this comes with its own signals in the cloud, just showing you the things are starting to line up to come on to the market as another opportunity for us to invest in these great fintech companies. So overall, YouTube, to wrap up the video, is that I'm a firm believer in these fintech companies and that we went over today, and I'm looking to continue to add to my position in Square and Alibaba, and definitely will be interested in Stripe if the market capitalization is not too high to be a long-term investor. And I do plan to keep on making some more videos into these fintech companies and keep on covering as much as I can, because I believe these are the new aged bank stocks or the financial stocks. Fintechs are covered in the tech sector, but I firmly believe they should be in the financial sector when it comes to how they group these different companies and what sector they're in, because again, I think this is the future of banking, and a lot of millennials and Generation Z are getting away from the traditional banks and moving on to these other platforms with payment processing a lot faster, and we're in that go type of stage of in life. And I think that's very important, and you don't have to go through so much paperwork like traditional banks as well. So I hope you enjoyed the video on the Q3 earnings of PayPal and kind of covering some of the fintechs that I'm bullish on, and giving you some some news on maybe some IPOs coming out and the way to invest in those different IPOs in these fintechs. But thank you so much for coming back to the channel, and remember, always invest in yourself.